In the last few days, I've been thinking about this question. If I had $120,000 to put to work, where would I invest? Set aside as a down payment for a property or invest in stocks? Of course, I can only make this comparison if I'm in for the long haul, meaning I will not need the money for the next 10 years or more. Let's talk about it. What's happening, everyone? Welcome to Think Finance. My name is Raj, and on this channel, I talk about personal finance, investment ideas, money management tips, and all things finance. If you're new here, consider subscribing. In this video, I want to talk about some benefits to invest in real estate, compare it to the stock market, look at performance over time, and then relate it to what's happening right now around us as we fight the pandemic. Stick around till the end because I think I might have a hybrid approach to this question. For many Americans, owning a home is an essential part of the American dream and comes with a lot of psychological and financial benefits, including sense of ownership and ability to accumulate wealth. Here are some of the reasons why you want to invest in a house. Sense of ownership, having something to live in when you retire. Hopefully by then your mortgage is fully paid off. It is an appreciating asset. Typically over time, real estate prices have gone up. It is a way to generate wealth. Comes with a lot of tax breaks as well. You can depreciate a property that typically appreciates over time. Also, you can deduct interest on mortgage. Magic, right? It can generate rental income, and rent automatically adjusts for inflation. As cost of living goes up, rent goes up. And you don't need all the money to own a property. For example, you can end up owning a $600K property for only 20% down. Leverage. And better yet, generate rental income the very next day of ownership. Perfect plan. And most people hold real estate for a long time since it is not a liquid form of investment. You take away emotions out of this investment. There is no overnight selling when it comes to real estate. Let's compare this to stocks. Stocks give you more diversification. At the end of the day, real estate is a sector versus something like the S&P 500, which is more diversified. Stocks are by far more liquid than real estate. Now, this can be a blessing or a curse. At times, it may lead to panic selling like we saw in March. For me, my portfolio acts as an emergency fund. You can't really do that with real estate. Also, there are literally no barriers to entry when it comes to stocks. Today, things are so much easier and cheaper with fintech companies like Betterment and M1 Finance. I can start my portfolio in a matter of minutes with as little as $50. Getting into real estate requires a lot of planning, researching, decent chunk of down payment, and a stellar credit to get the best mortgage rate possible. So of course, there's some differences between the two forms of investments, but how did they perform over time? There's this notion that real estate is the best form of investment. But is it? There was a study done by a team of economists from University of California to answer this question. Which form of investment performed better, stocks or real estate? And to do this right, they considered the rental income, dividend income, and adjusted for inflation as well. Now, they treated real estate as an investment, meaning rental income was a major driver for investing. They found that in the US over the last 145 years, housing returned 6% versus 8.4% when compared to equities. So does that mean we should put our $120,000 in stocks? Let's table that for a minute and talk about what's happening in the current environment. I did a detailed video discussing if you should buy a house now or wait. Link on the screen if you want to watch that video. Here is a quick summary. Unlike stocks, real estate prices have not dropped. Given where we are, interest rates are going to remain low for next 8 to 12 months. Demand for housing is expected to stay low given low consumer and home builder confidence and growing number of people without a job. For next few months, we'll be dealing with a recession, and history suggests home prices tend to stay pretty flat or maybe even drop a bit during recession. All of this tells me there is no reason to hurry and lock into a financial commitment. It might make sense to wait and see how things flush out. We have yet to experience the implication of the pandemic on the economy. Last week in Berkshire annual meeting, Warren Buffett said it's going to take years before we fully understand the impact of COVID-19 on the economy. If economic conditions go from bad to worse, you may end up scoring a deal. It might be worth waiting for the right opportunity. I don't think there's anything to lose. Again, more detail and data in the other video I did. From a stock market perspective, there are reasons to be bullish and bearish. Here are some bullish arguments. Markets are still 10% of the all-time highs, and we are in middle of a V-shaped recovery. America is opening, and that is a good sign for business and economy. Everything is going to be great soon. We are making progress in terms of treatment and vaccine development. Companies like Gilead and Moderna are successfully working towards the magic portion. Fed is ready to pump more liquidity in the market and do whatever it takes to keep the economy afloat. Investors are baking in the bad news out there, including recession, poor earnings, COVID-19 impacts, and investing based on what they expect from companies a year from now. In the long run, markets tend to go up, so it makes sense to invest when stocks are down, right? Here is what the bears can potentially argue. Virus is still out there. Some believe we are reopening too soon, and there could be a COVID-19 wave 2. While we may have made some progress, vaccine is going to take another 6 to 8 months. Economic news is telling the real story. 33 million people have lost their jobs, consumer confidence is at record low, and GDP contracted by 4.8%, and it's only going to get worse. The recent rally is a relief rally driven primarily by Fed stimulus, reopening of America, and FOMO, or fear of missing out. Some are calling this a bull trap. Last week, Trump threatened to slap new tariffs on China and reignited trade war. Not good for stocks. Okay, so you should probably wait for the right opportunity in real estate, and the bears make a valid argument when it comes to stocks. So where should you take your $120,000? Here's my 2 cents, and I'm going to leave you with 3 possible options. Number 1, I think stocks will be much higher from where we are 1 year from now. Yes, we have been on a tear recently, but stocks will consolidate. Given the home prices are still up there and interest rates are expected to stay low, I would wait for the right opportunity. In the meantime, invest the $120,000 in stocks and play the recovery. Remember, stocks are liquid. When you do find the right property, you can move your money into real estate. Number 2, just invest in stocks. Of course, you don't want to put all your money at once. History suggests once recession is behind us, the following 5 years have been great for stocks. Number 3, if you really have to get into real estate and don't want to risk investing in stocks, just stay cash until you find the right property. It's the safest thing you can do. What am I doing with my money? I'm going stocks, but then I'm also heavily invested in real estate. Going into stocks allows me to stay diversified. Okay, that's all I have, guys. Let me know where you would invest new money today. Thanks for watching. If this was helpful, hit that like button. And if money gets you going, consider subscribing. Stay safe, and until next time, peace.